I won't stop till I hear him say,
Okay, what is going on, CYPRX Advanced YouTubers? Welcome back to another CYPRX YouTube video breakdown. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. Guys and gals, what a beautiful intraday trade here on XRP USD. I had mentioned to the CYPRX students as well as you all on Twitter that I'm not going to be looking to facilitate any more long-term positions on XRP, and I'm only going to be taking intraday trades and scalping positions on XRP where I can utilize a stop loss on a leveraged account, and then also seek to take partials once areas of liquidity or retail liquidity has been taken out of the market. So this trade breakdown right here, very simplistic and easy to understand. We're going to be going over higher time frame analysis, i.e. the 15-minute and the 10-minute time frame, going all the way down to the lower time frames, the 5-minute and the 1-minute chart, giving you guys a visual perspective on how it is that I was able to utilize the CYPRX strategy to completely annihilate this trade. If you guys like video breakdowns like this, help you all understand technical analysis a little bit better, make sure that you smash that thumbs up button and subscribe to the YouTube channel. Let's dive into today's video breakdown. Very simplistic, easy rules to understand and follow. Remember, we are not reacting to the market until we see the market makers grab liquidity from the market. I've been mentioning to you guys for quite some time now that we need to see the market maker pattern. If you're looking for a buying opportunity, we're looking for the market makers to forcefully push their way into an area of liquidity. Once this happens, we know one of two things can happen. Either the market makers are going to continue the trend down, making lower lows or lower highs, or they are going to utilize this area as a catalyst to build the volume and the momentum that they need to drive price back to the upside. Well, once we see the market makers make this pattern, which is a grab of liquidity beneath lows, a fractal break in structure above highs, and we see a retracement into an area of interest, i.e. a discounted area where we know the market makers cannot just take one buy position from these lows. They have to scale into their position consistently to drive price higher, which makes the markets higher highs and higher lows. Okay, well, if we know that this is the pattern that the market makers make to drive price higher, we as retail traders can get in on this move, but we need confirmation. So we're not entering in necessarily here. This is a more risky trade, a more risky entry from this area. We're waiting for the market after the liquidity grab to give us a sign that it wants to continue higher one more time, which is a higher low and a higher high formation. So we're identifying the market creating a higher low, then we're taking our Fibonacci to get in on that continuational move back to the upside. Once the market retraces at least 25% from this fractal break in structure, after the market builds a higher low, giving us confirmation that the market makers have no interest in driving price lower. Once we start to see these patterns play out, again, our goals as retail traders is to move in tandem with the potential for a higher probability setup. Okay, nothing is guaranteed in this market. Our goal as traders is to give ourselves a well-defined edge for a trade to hopefully play out in our favor. Well, here at CYPRX, we have defined that edge within inside of our trading via technical analysis, along with some other fundamentals and some other things that we incorporate with the CYPRX students. But I'm telling you guys, it is insane the results that we are proving within our students. We're going to be doing another live interview with another student that has passed 3 prop firm challenges back to back and is now managing $30,000 in trading capital. It's absolutely phenomenal, the strategy that we're teaching here. Again, if anybody's interested in that, the link is in the description down below. You guys can always reach out to me, schedule a Zoom call. Maybe we can break down some of your trades. We can go over some price action. We can talk about what to expect when you enroll in the CYPRX mentorship. But let's jump to the higher time frame and break this trade down from the start. Okay, so i.e. 15 and the 10-minute time frame as scalpers, those are the time frames that I personally utilize as my higher time frame analysis, just because I'm looking to get in and out of the market based off of what previous sessions did, grabbing areas of liquidity and then reacting to that liquidity grab after the market shows us a sign and a reversal. Okay, so if we just pay attention to what London session and Asia session did the previous days, we can clearly see that they had an intention to grab liquidity from lows and make new highs. How can we see that? How can we identify that roughly on the 10-minute time frame? Here, during Asia session, okay, we see the market makers start to build trendline liquidity. Well, what's significant about this trendline liquidity? If we zoom in here, I've mentioned to you guys for quite some time that trendline traders like to trade the most significant touch of a trendline the third touch. So that is where the market makers most likely are building the most liquidity. Well, when we can see that, we can also see that that takes place during the manipulation window, which is a window of time that we seek to avoid trading in Asia session. Okay, it also takes place during London and New York session, but we'll get to that in just 1 second. Well, we see trend line liquidity here. We trade against retail methodology. So when we see retail methodologies building up in the market, we can utilize that as a catalyst to say the banking institutions are most likely going to grab this liquidity. And what do the market makers do here? They build all this trend line liquidity. They dump price to give themselves discount from where they bought from when the daily candlestick opened. If you guys can see in this area, this is when the market roughly resets itself in the FX markets. However, you guys know that the crypto markets never shut down, but this is where the daily candlestick starts to open. Well, we can see they had the same methodology here. They push price into discount beneath a low and then took buy positions, creating new highs. Same thing here. They pushed price down, canceling out all the orders in this general vicinity beneath retail trading trendline methodology traders, okay? And then they took buy positions from discount, making new highs in the market from where they bought from when the daily candlestick opened. So we can see the general ideology behind banking institutions during this Asia or Tokyo session, or however you want to classify it, was what? They are pushing price down into discount to take buys to make new highs and then taking profit. Boom, pushing price down into discount, grabbing liquidity from lows, taking buy positions and making new highs before taking profit. So we can see that during this Asia session, the predominant opportunities were buys. Okay, now we go over to the London session and we can analyze breaking down price action via what happened. So now we have structure playing out. Now we know that in order for this market to reverse on the higher time frame, logically speaking, coming into this London session, what must happen? We must create on the 10-minute time frame a new structural low. What do I mean by that? We must create for this price action to reverse bearish. Obviously, of course, we now know that Asia session is predominantly taking buys. We know that we must create a lower low, lower high, lower low, lower high continuational pattern for this market to reverse bearish and for us to reverse our bias from bullish to bearish. Well, when we don't see this price action happen and we want to trade in tandem with the banking institutions, we must continue to follow the trend. I'm sure that if you have been trading for quite some time, you guys have been reading trading books or something along the lines of that, and you've heard this term, trade in tandem with the higher time frame, or the trend is your friend, right? Well, if we can clearly see that the banking institutions during Asia are taking buys, now I'm going to show you how the banking institutions during London were taking buys. That most likely means that the banks and institutions during New York, if they do not break structural lows, meaning that we see 10-minute candlestick body closes or 15-minute candlestick body closes that violate these lows, making new structure lows, making new structure lower highs, and making new structure lower lows, and continuing that pattern down, then what's going to happen? A market continuation to the upside. The banks and institutions currently with this temporary price action are more interested in driving price higher. So we broke down Asia session and what they did. Let's break down London session. So now we have two significant areas, i.e. the first area where the banking institutions bought price action from during Asia session when the daily candlestick opened here in this general vicinity. Okay, so that's one area that we would need to see broken. Now we also have a second area that broke previous market structure, okay, and created a new high in the market. So now we have a higher high, higher low, higher high formation. We now have two significant areas that London session would need to break for us to consider selling price action. Until that happens, we are predominantly buyers or looking to move in tandem with the higher time frame, i.e. the 10 and 15 minute as scalpers, moving in tandem with the banking institutions who are telling us they want to liquidate retail liquidity and take buy positions from a discount. Okay, so now let's look at what London session did. Again, we are New York session traders, so we're waiting for all this to happen. And so many people would be like, oh, hindsight testing is garbage and you shouldn't do it. Well, guess what, guys and gals? We would have had all of this price action to analyze before we came into this New York session. So for you to sit here, or for any guru on the internet to tell you that hindsight testing is rubbish, let me tell you firsthand that that is one of the main reasons why our CYPRX students are slaying these markets. And it is because they have well defined their strategy by going back in price action and being able to identify these market maker patterns. So now let's identify what London session did. And let's also identify the lows that were created during London session, where if we were looking to trade this New York session, we would need to break bearish for us to reverse our bias, again, which is a bullish bias temporarily, okay? So London session, what did they do? They manipulated retail liquidity. If you guys can see this little tiny note that I have here, a retail triple top was formed during London and Asia session. As you guys can see here, here's a top, i.e. resistance trade traders in the market are looking to take sells from these highs. We see now also here during the manipulation window, it's again very significant and plays a key important role. If you guys want to learn more in depth about specific times and entry criteria in the market via different sessions, you guys are going to need to enroll in that CYPRX mentorship program, because I'm almost 110% guaranteed that the information that we provide to our CYPRX students you cannot find on the internet right now. But anyways, we see this manipulation window, and what are they building? This is now a double top formation. However, during the London session, we also see that triple top formation play out, where we can see retail traders were most likely taking sell positions from here. You guys can go and research a triple top formation, and we here at CYPRX look and seek to trade against that. We already have two well-defined areas of interest that we would need to break to the downside to reverse our bias. So here at CYPRX, what are we doing? We're patiently sitting on our hands, seeking to obtain buying opportunities, because we know the banking institutions are more interested in buys. And golly gee, guys and gals, would you look at that? I can't even believe I just said golly gee, but it's so simple how this plays out. The banking institutions manipulated buyers that seek to do what? Chase bullish candlesticks. Here's a temporary bullish pump in the market. What were the market makers doing? They were coming to attack the trend line liquidity here in this area. Well, would you again look at that? The methodologies that I'm attempting to teach you guys, were the third touch of a trend line is the most predominant area where the banking institutions seek to attack. They attack that trend line. They manipulate buyers to build liquidity beneath lows. They attack that liquidity, i.e. giving themselves discount. London session traders are literally giving themselves discount. Guys and gals, here is the pattern that I teach you to identify right here. Look at this. Here's a low right here. Over here to the right hand side, before we started this video, I said once a low gets violated and the market breaks previous market structure, this is a market maker pattern. Well, would you look at this, guys and gals? Here's a low that gets violated. The market makers bully price, push it down into discount for themselves, and they take predominant buy positions. So now not only have we just clarified that Asia session is manipulating early buyers, building liquidity to take discounted buy positions after liquidating those positions, but now we've identified that London session is doing the same thing. So let's clear up the charts a little bit and get rid of some of these drawings so we don't confuse anybody here at CYPRX. We're just trying to give you guys clarity in the market. So now we have a well-defined area of interest via the 10-minute chart that we would need to break in the form of candlestick body closes beneath lows during London session, okay, that we would need to see broken before we can reverse our bias from bullish to bearish. So now not only do we have 1, 2, and 3 areas of interest that we would need to see broken before we seek to take sells, but we also see that buyers are predominantly dominating this market. So with all that being well defined on the higher time frame, if you guys are enjoying this video breakdown, smash that thumbs up button. We are giving you guys extreme clarity here at CYPRX. We are now going to go into the well-defined trade that we placed here at CYPRX during this New York session, utilizing manipulation methodologies, understanding structural points that have not been broken on the higher time frame, and trading in tandem with the higher time frame, i.e. the trend that is clearly playing out where banking institutions are liquidating retail, giving themselves discount, taking buys and making new highs. Well, we can see on the 10-minute chart that this is a new A to B move coming into this New York session. Well, with that being said, we know a couple of well-defined things coming into New York sessions as CYPRX traders. Number one, banking institutions are not going to buy from a high, guys and gals. Well, you can see once New York session got past price action, it was operating at a what? A new market structure high. How can we identify that it was operating at a new market structure high? Because in comparison to the previous high, this high is higher. Banking institutions are not stupid, guys and gals. They are not going to buy price. What are they going to do? They're going to manipulate sellers by dropping price action. They know that retail traders are going to chase these bearish candlesticks. And what else are they going to do? Most likely somewhere here in this general vicinity, I'm going to drop down to the lower time frame in this area during the manipulation window. Again, it plays out to the T. They are doing what? Building some type of trend line liquidity on the lower time frame. Okay, not only that, but what do we see in this general vicinity? Look at these 10-minute candlesticks. Now, I want you guys to be able to identify structure here. What do these 10-minute candlesticks show us via in comparison to the previous 10-minute candlesticks lows that we can identify here to build a confluence? Candlestick body closes. We can see that there is not enough sell pressure in the market to close the market beneath the previous low, which would do what? Give us a lower low formation. We are not creating lower lows on the 10-minute chart. We are creating wicks through areas of interest, through areas of liquidity, creating that pattern on the fractal structure of things, which I'm going to go into in just 1 second. But we are failing to generate a brand new candlestick body low formation, i.e. a new swing low beneath previous market structure areas of interest that we know we would need to break in order to reverse our bias. So that was one catalyst on the higher time frame. So let's go over our list of confluences. I'm telling you guys, take notes if you are watching this video. If you do not have a pen and paper and you are seeking to profitably trade these markets, i.e. the crypto or the forex industry, and you're not taking notes on this video, man, let me tell you what, rewind this video, watch it again, and take notes. Okay, so higher time frame confluences. Number one, we can already see that we have buying interest via the banking institutions during Asia and London. That's confluence number one. We are trending up, meaning what? This is bullish order flow. So if we want to trade in tandem with the banking institutions, we need to trade in tandem with that order flow, right? That's confluence number one. Confluence number two, we are failing to break key areas of interest, i.e. bearish momentum below. So we have sustained key and well-defined areas of interest where we know the banking institutions are manipulating price down to take discounted price from psychological levels and driving price higher. Same thing here. They manipulated retail, and London session took buy positions from these lows, giving themselves discount to take buys and then take profit right before they pass price action over to New York session. So we have three well-defined areas that we would need to break to reverse our bias from bullish to bearish. We are not breaking those levels. So that is a second confluence. Third confluence, we are creating new market structure lows and new market structure highs. On the 10-minute chart, this is a green light for us to say, okay, if institutions are going to add to one of these orders, what are they most likely going to do? This is where our Fibonacci tool comes into hand, right? We can draw it from one of the lows that violated a previous market structure high, i.e. this high here, violated the previous market structure high, and we can seek to get in at a discounted price. Well, we know that the banking institutions like to buy from roughly around 62 to 100% discount from where the previous banking institutions bought from. Well, if these are the areas of interest that the banking institutions bought from previously, i.e. during Asia and London session, we know that somewhere over to the right-hand side, New York session is going to seek to buy from a discount from one of these three areas. Guys and gals, catch my drift. The banking institutions like to piggyback off of previous banking institutional orders. It is that simple. So now we have 3 or 4 higher time frame confluences. Bullish order flow, failing to break previous bullish market structure, creating new market structure A to B moves that we can seek to take our Fibonacci from on the higher time frame to get in at a discounted price from these previous levels. And we also have failure to break during this New York session a 10-minute structure low. We are just wicking beneath this low, but the candlestick bodies are closing above it. Now that you guys have all the higher time frame confluences, this is nuts, and I'm almost 110% sure there's no other traders out there giving this much of an in-depth breakdown. Let's jump down to the 1-minute chart so I can show you guys how we caught this move fractally going off of the same trading pattern. It is literally insane. So coming into this New York session, what do we see? I'll draw on the general manipulation box. Again, I can't give you guys the specific times that we seek to avoid the market during this manipulation window. That would not be fair to the CYPRX students. However, in this general vicinity, there is a lot of manipulation. I will just let you guys know that. And what can we also see here? This is where the trend line liquidity starts to form, right? And voila, would you guys look at this? 1 touch, 2 touch, 3 touch of a trend line. Again, we trade against this crap. We know that retail traders are impatient and they're looking at this as a trend line and they're taking over leveraged sell positions above highs during this manipulation window. The market makers are clearly manipulating that. We've also already established that once New York session got past price action, it was operating at a what? It was operating at a high, guys and gals. We know that the banking institutions are not going to buy from a high. So what do we do here at CYPRX? We are patient. We wait and sit on our hands. We wait for what pattern to play out. Fractally, a grab of liquidity beneath a low, a fractal market break-in structure, and then we seek to get that confirmation, that higher low after the grab of liquidity. Once the market breaks a market structure high, we look to get in over to the right-hand side once the market continues up. This is so simple, guys and gals. Look at what happens. Right here, the market makers drive price out of the manipulation window down into that area of interest where we know already London session banking institutions bought from, and they did the same pattern. They drove price beneath a low, clearing out liquidity from over leveraged buy positions here and people that were willing to sell in the form of sell stops underneath of these lows, and they took buys, driving price higher. This was that key 10-minute area of interest that we marked off on London session and extended that over to the right-hand side. We know that if New York session fails to break that, they're most likely going to take discounted buy positions from those levels. Well, guys and gals, would you look at this? They created the pattern, the market maker pattern right here. Here is a low that gets violated. Let me extend this up so you guys can see this a little bit better. It's so simplistic. Here is a low that gets violated. So at this point, we're patient, right? We're patient. We see the market dumping. We have all these higher time frame confluences, right? Most traders are sweating. They're chasing bearish candlesticks. They're already in the market. Maybe they're in a little bit of sell profit, blah, 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 blah. We already know higher time frame is bullish. So what are we doing? We're laughing at these retail traders because these higher time frame lows, i.e. this area of interest, has not been broken, i.e. fractally or on the 10-minute chart, and price action has not closed below. So we know that this is a sensitive area where the banking institutions during New York, because they got past price action at a high, are most likely going to take discounted buys from, okay? And if not this area, we will then monitor what? The next area of interest, which is the what? The Asia session area of interest that the banks bought from when they manipulated price to give themselves discount. We are still not bearish yet. However, retail money does not know that because they do not understand how to properly read price action. They join these mentorships that teach you retail methodologies, trend line, right? Double tops, double bottoms, support resistance, order blocks. I freaking cannot stand order block traders. They are the most hilarious ones out there. Even the Wycovian traders, they are the most hilarious. They'll go tell you to read these Wycovian books and all this labeling on your charts. It's disgusting, guys and gals. Don't listen to it. You don't need it. Okay. So anyways, moving on. We see the market maker pattern right here, which is a violation of a low. Okay. Then we see the market break fractal structure, all this price action right here in comparison to the previous fractal lower high right here was broken. So now we see the market maker pattern. The markets have showed us a willingness to halt price, grab liquidity beneath lows. They have no interest in lower price action when you see this pattern, especially if they create a higher low after the grab of liquidity that leads to a market break in fractal structure. Guys and gals, here is the pattern right here. Once this all plays out, again, what we are seeking to do here at CYPRX and attempting to teach you guys here on YouTube is we are not guaranteed this 100% of the time, but what we are guaranteed is to control our emotions. What we are guaranteed is to be patient in the market. And what we are also guaranteed is controlling our risk, right? Well, 90% of people fail to control their risk and protect their capital. Our goal as traders is to do what? It is to protect our capital, not to make money. Making money is the easy part in the market. Anybody, I could give my mom my cell phone for an entire month and say, Mom, can you randomly hit buy or sell on XRP for an entire month? And she will come out with more money on top than a trader who tries to force trades. Here at CYPRX, we do not force anything. We wait for the market to give us clarity. Once the market gives us a well-defined, clear edge, we take the risk. Why? Because this is giving us a higher probability setup for a trade to go in our favor once we've well defined every single confluence that I've given you guys up to this point. It is literally insane. If you're here and you're listening to this and this information is helping you all out, back test this, demo account test this, utilize it for yourself. I'm giving you guys a key piece of information here. Please take what I'm saying and utilize it to benefit your life. Again, nothing that I constitute here is financial advice. This is not 100% guaranteed because sometimes this pattern will reverse on you, but 90% of the time, this is a market maker pattern that the market makers must create in order to drive price higher. So now that we've had our well-defined 15 and 10-minute area of interest, rejection, we see the market grab liquidity from a low fractally and make new structure highs and create a higher low A to B move. We can now utilize our Fibonacci tool, which 90% of people on the internet utilize this some magic Fibonacci extension tool to give you some stupid price prediction on XRP. Stop following those YouTubers. I cannot stress enough that is not what this tool is used for, guys and gals. Every single person here at CYPRX that has joined this community now has a well-defined vision for what this Fibonacci tool is actually utilized for, and they utilize it on a day-to-day basis to get those sniper entries. And boom, taking our Fibonacci from the higher low right here after the grab of liquidity, we see that the market makers added to their order, again, confirming what it is that I say to you guys, that they cannot just take one buy position. They have to take multiple orders. And this is how the market makers drive price higher and create these higher highs, higher lows, higher highs, higher lows in the market. Here at CYPRX, we are seeking to get in on these higher lows after we have a well-defined edge. Guys and gals, this was a beautiful risk-reward ratio, stops beneath the A move that led to the market break in structure, minimizing our risk and maximizing our reward. Now, I want to, again, build you guys our last confluence. Our last confluence, let me clear up the charts a little bit for you guys so none of this confuses anybody. Our last confluence had logic in the market, okay? Now, a lot of people will not have take profit areas. They will not have any kind of logic as to why they're doing something. Do you guys remember how we had that well-defined trend line liquidity over here in the manipulation window? Well, we already know that the banking institutions, if they're not going to target lows and they're targeting lows to make new highs, they must do what? On the higher time frame, they must drive price higher. We know that the banking institutions like to target retail money. Well, guys and gals, look at this. What was left behind during New York session to give us that cherry on the top that this price action was going to drive higher to take out retail money. That trend line liquidity that we had defined coming into this New York session, that 90% of people will say, oh, hindsight testing is bullcrap and da-da-da-da-da. Well, guess what, guys and gals? We would have had all of this price action to analyze before this New York session. This was an easy and absolutely beautiful trade here at CYPRX, a 1 to, let's say, 5 risk to reward ratio, because personally, I'm expecting this to come up into the 37 psychological level. I'm still holding this trade. I've partialed out a little bit. I always partial out once previous higher time frame highs are violated. That's another thing that I teach the CYPRX students. If you guys enjoyed this video breakdown, smash that thumbs up button, subscribe to the YouTube channel. Anybody that is interested in the CYPRX mentorship, we are giving people clarity here. Over 60 hours of course content, one-on-one mentoring, community weekly Zoom calls, private Discord chat. Again, if you want to excel in your trading, you are going to have to get a mentor. Now, would you rather have a mentor that teaches you retail methodology or a mentor that teaches you a well-defined strategy that gives you an edge in the market? You guys ask that question yourself. We're here to help. If you need the help, blessings to you guys. We really do appreciate the love and the support. The channel is growing immensely. I know that for a fact you guys are enjoying this content via all the feedback that we've got. We really do appreciate all the love and the support. I'd just like to give a video reel shout out to all the individuals that have been supporting this channel. So here's going to be just a screenshot reel of all the positive feedback that we've gotten over the whole entire course, the year that CYPRX has been fully established as a licensed LLC. We really do appreciate the love and the support. Again, I cannot thank you guys enough. Don't forget that we are going to be doing a 100 XRP giveaway once we reach 10,000 YouTube subscribers. And as always, guys and gals, be cognizant, be aware. Please, please, please be aware. I cannot stress that enough. Be safe, and I will see you guys in the next YouTube video break.
I won't stop till I make a change. I withdraw on the things I make. I turn flaws into flawless traits. I build tall, never capped in space. I won't stop till I hear him say, oh, oh.